Hello and good morning. It is the 26th of July 2023, and in this video I'm going to show you how I'm breaking my own trading rules, how I broke my own trading rules, and I'm going to break them again more today at the end of this video. I'm going to go through S&P 500, we're going to go through the relative strength index, the MACD indicator, the Ichimoku cloud, and the Bollinger Bands, and at the end I'll show you my trade over on Simple FX. So today's a big day because the Fed is speaking. They may or may not increase interest rates, and their message has been that they're going to be taking inflation down, and they increased interest rates at a more aggressive pace than they've done ever before. We've got this inversion of the interest rates from the long term and the short term, and people are expecting that they're going to be increasing the interest rates again today to slow down the economy more. They're intentionally trying to, and it hasn't really worked so far. So what I want to do is go through the indicators, starting off with the weekly time frame, and just mark it out because I really don't know. I really don't know the future. I really don't have a degree in all of the economic stuff. All I can do is look at the charts and use my risk control rules. So what I'm looking at here now is the uptrend, and I am noticing that there is a bearish divergence across this top here. We've got higher highs and we've got flat highs on the daily relative strength index. So I've got a limited set of data here, but on the 4-hour time frame, we can see that same bearish divergence. Then as we go into the hourly time frame here, it's getting even more prevalent, stronger bearish divergence across that top right now. And so my trading system looks for the break of the uptrend line, the 1, 2, 3 top formation, as the exit. So I don't wait for the, that's a terrible 3. I don't wait for the exponential moving averages to cross over for my exit. I just only use the 1, 2, 3 formation and the break of the trend line, because the uptrend line is where the action is for exiting on prices moving up. The parallel support isn't, I don't find it as actually working support as prices are coming down. The trend line along the bottom is where the real support lies. So now I want to go through the MACD indicator here on the weekly time frame. We can see parallel arms up with the weekly. Parallel arms up, still not showing any top or anything right there yet. Now as I go into the daily, I'm starting to see that same bearish divergence here. As I go into the 12-hour, the charts are the same. Here again, the 4-hour, it's similar. We can see that bearish divergence setting up. And again, on the 1-hour, that bearish divergence stands out even more strongly right now. So right this minute is really important for the way this is laying out, for the way I've looked at the charts. Now, here's the weekly Ichimoku, under the cloud, under the cloud, under the cloud, and bounced. And it just never came back under the cloud after that. They just kept printing more money and blowing up the balloon. So who knows how high they can blow this. Right? Money is just a measure of thing. It's not actually a quantity. I don't know. So Ichimoku cloud is still bullish here on the weekly. Daily, it's bullish. 12-hour would be the same. 4-hour is bullish. Nothing there. 1-hour has bounced off the cloud, which is a bullish continuation, but it's not giving us a little bit of weakness with the trailing indicator cutting through into prices now, but we're not in the cloud. We don't have a twist of the blue under the red yet. So the Ichimoku cloud won't exit this as aggressively. It's going to give this double top some time before it gets underneath this cloud, before it's going to give us the exit for even on the hourly time frame. So the Ichimoku is going to keep us in there until, for me, until we get under the 1, 2, 3 formation, and we would have to do our risk control on something like that if it comes under there. So this is, but the Ichimoku then might help us for the the Ichimoku might help us for the add-on trade when doing this correctly. Now the Bollinger Bands weekly time frame, weekly, I want to see, where did we dip down on the weekly? Did we get outside the Bollinger Bands on these last big dumps as we came down to this 200 period exponential moving average that we just kept pretty much all the time? It's been a real indicator that we want to keep above that, and we're way above it right now on the weekly time frame. We bounced off it. We had a really good, and we'll check that out. Daily time frame. We are, I don't see, you know, it looks like it still could continue upwards from this. The 4 hour is starting to pinch in. Finally, we're getting some direction here with the the Bollinger Bands. I feel like I have too many kids and you keep calling them all the wrong name. So there's the double top, break of the uptrend line. Nothing really outside the Bollinger Bands to give me the mean reversion sell signal like I was kind of wanting to see here. That would give me more confirmation, and I'm searching for it even in a small time frame, and I'm not getting it. Though there it is. There it is. We're bouncing off the bottoms and continuing strong, but we're not really poking out the top to show a blowout yet. So let's see what my personal indicator that I had my developer create for me, and he's now writing some articles over on our Medium publication, Digital Currency Traders. So I'm excited to get some of his really genius stuff out there. Anyway, here on the weekly, this indicator shows us this bottom, bright green, but no bright green bottom here. No bright green bottom all the way along until we hit, right? No bright green bottom yet. No bright green bottom yet. In my bias, the bright green bottom is going to be down here. In my thinking, down at this support and resistance level. And of course I have no idea at all. I'm just looking at those colors and throwing that out there, and we'll see if we can track it out afterwards. So now going into the daily, we did get that color band as we came down on the daily time frame here. So we can zoom back and see where we did get the color. Sorry about that, pardon me. So again, I'm zooming in now on this custom indicator so that I can see the color coding on these different time frames to see if we are coming up to something that is giving us more of a bullish bottom, saying that's enough, we've gone down far enough, these are the extremes. But I'm not seeing the extremes up in the top where that red would give, the bright red would give me the idea that we've come up far enough. So here's the bright red, a little bit of tinge of red, but nothing that I'm wanting to see, and I don't know what this means for the future. I'm just mapping this out right now so that later I can do case studies on this specific indicator as I get to know it better over the years coming up. So there's what I've been looking at for S&P 500, and since I have the bias that I think the Fed is going to be increasing interest rates, let's see, is there a chart here that'll give me that? No chart that has the data here. So there's headlines, but there's no news little thing in there for me to click on. Now, let's finish up by looking at the trade that I did in S&P 500, because I broke my own trading rules with this very little bit of Bitcoin that I have. This little bit of Bitcoin I earned from referral earnings, and I had that referral earnings turned into Bitcoin, and then I would use it to trade. So here you can see that I had a market sell on the S&P 500 back here. Fail. And as it blasted off, I thought, no way, give me a break. It's not going to be taking off. This is like, no way. So I just held this because it's a very small little bit of money on this. So I just held it as it went up like this, breaking my trading rules. Now, another trading rule I have is that you do not dollar cost average into a losing trade. Never add on to a losing position. I guess it's never in parentheses, because I can just go sell with the little bit of Bitcoin that I have available. I need 0016, I've got 0020. I'm going to submit and sell another contract of S&P 500 right now. So I will get kicked out of both of them at 45.77.9. Let's put that up there now, and I'll take those losses. what was that again? 45.77.9. 45.77.9. So there's my stop. You can see it on the screen. 45.77.9. And I got another stop in that same place. Whoop. 45.77.5. All right, so I can see them a little bit different. And I'm going to take, I'll edit this one here. 6. So I bring it down a little bit. And then I'm just going to show you that I can actually drag this stop loss and confirm it. So I don't have to type it into the screen all the time. I can just drag the stop losses down as prices continue so that I can manage my risk. Another thing I like about the Simple FX platform is that I have two distinctly different trades here, and I have two different stop losses on them. When I add on to a position, I don't mold them both together and get an average entry that I have to deal with. So this is one of my favorite aspects of this trading platform. I can drag the stops around, and that I can have multiple trades in a single platform, in a single market. And I just want to review the oil trade and the what do I have in this one? Natural gas. So I have a little bit of US dollar, and I have a natural gas trade in here with 2 entries, and I've layered out my stop losses here and there. So this way I have a little entry on that market, a few dollars, and I have my stop losses layered that I will be reducing my position if the market doesn't prove me correct. Now the market has been floating sideways long enough. I may want to just close part of this trade manually rather than letting the market prove me wrong. So I also have a trade using Litecoin on this market, and that trade is in oil. And this trade is a little bit also under the weather, where I got in here. Prices broke out. I was doing good, but it's a little bit under the weather now. I had 2 positions. The second one closed at a little profit, and now I'm just hovering sideways with oil. I do expect oil prices and natural gas prices to drop if the S&P 500 starts to fall back, and I'll get out of those positions. I'll take those little bit of a loss, and I'll also double check those charts to see if I should be going short on those. So that's what I'm doing here on Simple FX. I have 3 different trading accounts, and all of them have very tiny little bit of money in them, so that I can practice trading this trading system for little bits of money and just practice the trading system. So anyway, that's it for what I'm doing with the S&P 500 here today. Now my prices are delayed on the charts, but I can go to my Simple FX where the prices are not delayed so that I can keep up on that. And I can have this open in one monitor and then be doing work in the other monitor while I'm going along. Thanks for tuning in on this video. Went a little bit longer than I like to on this. I'd like to keep it to under 10 minutes, but there we are, the S&P 500. I would love to hear your comments about the indicators that I'm using, the trading system I'm using, anything that I'm doing wrong with my trades. Please leave your comments down below. That's it for today. Trade safe and keep those losses small.